Good evening, everyone. Thank you for joining. I think this is our fifth session, and this weekend we are going to cover the continuation of using the scan option in Thinkorswim. Um, Last week we have covered the stock hacker, and then I think it took about 1 hour, and we couldn't um, look at the options hacker and the spread hacker, the spread book. So this weekend we are gonna look at the stock hacker a little bit, just for first 5 minutes to refresh, and then we will look at option hacker and spread hacker. Um, like I said last week in Thinkorswim, we have a tab called Scan, and under Scan we have different tabs, and then the first one is stock hacker, and stock hacker is basically used to scan for stocks using different criteria. We can, we have, I have hundreds of scanners. I think I only use maybe two or three after testing hundreds and hundreds of um, scanners or the years. And I think I like two or three scanners right now. There are many ways to scan. It's not like one scan will work all the time. It's basically someone's personal preference. If you're a day trader, you may have to scan for different criteria and different time frames. If you're a swing trader, you may have to look for different criteria. So let me put the participants tab here so I can mute if I have to and unmute if I have to. Okay, so some of you would have noticed that ThinkSabio have introduced a report where we will be able to see one stock that has been up for a number of days, right? And then along with some volume breakout. I was just looking at that, and then way back in maybe 2021, maybe I think I have created similar scanner. I will just touch base that just as a refresher to the stock hacker. This scanner basically is 3 up days. That means a stock that has closed in green for 3 days straight. And then we can change the criteria to 5, 6, 10 days, however we want. So for that, basically, I have a custom script here. And then if you expand it, what it will do is I have defined a criteria where close 3 stands for the third day from today, the 3 days ago from today close should be less than close 2, which is 2 days, and then close 2 should be less than yesterday, and close 1 yesterday should be less than today. And it also looks for two up candles for the closes. So basically, this particular condition will search for stocks that have closed for 3 successive days, closed in green for 3 successive days. And then this scanner is like the average volume should be greater than 1 million. For the last 30 days, average should be greater than 1 million. And then this condition will look for dollar volume greater than 2 million. Well, actually, let's do that's 20 million. And then this scanner right here, this criteria, this here will look for stocks that have an ADR average day range of greater than 2%. And if you see the ADR right here, everything is above 2%. If we see why it is like that, we want some stocks that is very strong. If a stock is going up for 3 days in a row, we can think that something is happening on that stock. Either it is a good market or the stock is really strong, and that's why it is closing for 3 straight days in green. And then the volume should, of course, be greater than 1 million over the last 30 days on average. And then the dollar volume will filter out all the noise. For example, if there are any penny stocks or any OTC stocks, or well, I exclude OTC stocks, but if there are any stocks that are just moving on some memes or whatever, it will exclude that, because the dollar volume should be greater than 20 million. And then this criteria will filter out stocks that are moving very slow. If a stock is not moving more than 2%, even if it closes green, we don't care about it, right? So we got few stocks. It's actually very good if you are getting the scan results less than 10. And there is a reason why it's less than 10, because the overall market in itself is going down. So these are the stocks that you can think that are relatively strong. What I mean by relatively strong is when the whole index like SPY is going down, but these stocks are up for 3 days in a row. That means these stocks are very strong. I also like to add a column here, ER date, that is earnings date. If you see, it tells a story that LIN, this stock has ER in next 43 days, right? So it has recently completed 15 days ago, it's 18 days ago, it's ER. So the ER date is 43 days from now. So we are not anywhere close to earnings. But if you see this stock, RRC, it's close to earnings. It is up 3 straight days in a row. Maybe someone knows what's happening inside. That's why they're buying. Or maybe people are speculating it's gonna go up. Same with LAZR. I mean, this stock has a lot of buzz on option scanner. Something is cooking with LAZR. So, you can see that here. And then based on earnings date, I try to avoid earnings dates because the options contracts are usually high because of IV. I pick stocks that are far away from the ER date. For example, if you look at Intuit, it just completed ER, and maybe that's why it is up for 3 days in a row. So this is one way. There is also a scanner, for example, it shows me 3 down days. It's just opposite. And then you can see, of course, we will see a lot of stocks 24 because, the whole market in itself is going down. The conditions are same, except that it will look for stocks that have gone down 3 days in a row. You can see Google is very weak. It's down for 3 days in a row. So the close here is less than here. The close here is less than here. The close here is less than here. It is down 3 days in a row. So we know that it is a weak stock. I try to sort it by dollar volume. That's because I know where is the aggressive buying and selling happening. You can sort it by volume or shares, market cap, whatever makes you feel comfortable. So this is just touching again on the stock scanner. I mean, there are n number of ways to use this scanners here, like these conditions. None of these conditions are provided by Thinkorswim. All these are custom coded by myself. So you can do the coding yourself if you want. You can create additional filter if you want. So add filter, steady, you can type custom, and then you can basically write your own criteria here. So definition is like you have to define a condition. You have to define a particular condition to a name so you can call it. The script that we use on Thinkorswim is called ThinkScript. I find it very easy. Many of you are already working on as part of your day-to-day job. If you work on some kind of scripting language, I think you can easily crack it. So it's just like any other coding language. I have zero experience in coding, but I'm able to do it. So if anyone is already working on coding, it's pretty easy for you guys. All you have to do is visualize what indicator you want and what condition you want to scan, and you can write these. So that is stock scanner. We will move into options hacker, which is right next to stock hacker right here. There is a thing called options hacker. Options hacker will basically scan for particular contracts that have a specific condition. Unlike stock hacker, I cannot write custom coding and I cannot write custom criteria for options hacker. The stock hacker, I can write n number of conditions. I can write 100 pages of conditions myself, and it's all good. But options hacker, we do not have that flexibility. We basically have to pick what they have given. There is no way I can write something custom, an options hacker. It is purely whatever Thinkorswim has given, because it is just not a stock. So the options have a lot of variables. It is closely, it's not like buy and sell. It is just not bid and ask. Options have a lot of variables. It heavily relies on theta, gamma, delta, vega, and there are second level Greeks, Wana and Charm and all of that stuff. So it's very hard to write any conditions, and then Thinkorswim doesn't allow us to write custom scripts on options hacker. I tried in 2021 to write some custom code on options outside of Thinkorswim. That's just too much work for me. So I just thought like, okay, let me ignore that, and let me just use whatever they have given. So this is one of the options hacker that I use. And like I said, I'm not day trading because I have to go to office, but I used to use this options hacker. And actually, one of our ThinkSavians, he has shared this options hacker with me. And I tweaked a few things here and there. This is what it looks like. So let's dive into it and let's see what it is. So let's say you are opening options hacker as fresh, right? So you don't have any of this. This is how it will look like. So all you have to do is add a filter and select option right here, right? And then these are the options that you have to already understand in order to create a scanner. All these things are pretty day-to-day things that you look at options. If you're looking at options, the trading options, like what is the ask, what is the bid, what is the covered return, what is the days to expiry, what's the delta, and extrinsic value, intrinsic value. We should already know these terms. If we don't know these, I would highly recommend to focus on learning these terms before starting with options. But then to begin with, we can select something like days to expire. As you all know, zero DTE, for example, the contracts that expire on the same day will be very volatile, and a small move up or down will result in a big percentage of gain because the gamma will be accelerating so fast. And then the probability of certain thing happening today will be very aggressive. For example, if a stock is trading at 120 and then you're already at 12 o'clock Eastern, and then the probability of the stock closing at 122 is very less because it's a big jump in terms of percentage. So if you buy 122 and then if the stock goes up and closes above 122, you will be looking at maybe 200-300% profit on those contracts. So the days to expiry is probably one of the important criteria, and you can select days to expiry as something like 14 days, right? You can select if you want minimum. You can say like minimum, I will trade anything 5 days to 14 days. Or you can say I'll trade anything from 0 to 7 days, right? And then you click add filter, you click option again, and then you can come here and you can basically say, I want that contract that I'm trading to have an open interest of minimum 2000. Minimum 2000 contracts on that particular contract should be the open interest. And then you'll select this, and then you'll say the volume on that particular contract, it's not maximum, it should be minimum. And then the volume should also be 2000, for example. This is all for options, right? This volume 2000, it's very low because the stock itself may have millions and millions of volume, but this volume is for options contract, specific contract. This is not the volume for the stock itself. This is the options volume. And then you can also select that You can select anything like mark percent change of underlying is the difference between the close of yesterday and today. And then return on capital, like I want 10% return on capital. And then the probability of in the money, probability of in the money should be minimum, let's say 80%. That means you are looking for a contract that has a highest probability of going in the money. Looks like 80% is, you have a lot of stocks, so let's make it 95. You see you have like 77 million matches if you select 95 here. But we will run a quick scan here, and then let's see if we will find anything. And then I'm searching in all symbols, and I think because it is a weekend, all I'm seeing is futures contracts. Let me see if I can move it a little. Close the probability. Yeah, we're only gonna see the futures because today's a weekend. But in general, you would see Apple or Google, Tesla, whatever, all the stocks here that meets these criteria. The one that I use is, let me see this one. This is the one that I use, and oh, I think I'm writing something wrong. But yeah, so I have QQQ, Apple, NVIDIA, everything that came up here, because these are the stocks that have an expiry of maximum 14 days. So if any contract is expiring, let's say 1 month from now, it's gonna remove that. It should have a minimum volume of 5,000. Should have an open interest of minimum 2,000. The last means the price of the contract should be between 1 and 20. That means $100 to 2,000. And then the net change should be plus 10 cents from yesterday. That means the contract value should be at least 10 cents above what it was yesterday. If the contract has closed, let's say 150 yesterday, it should be at least above 150.10 cents. So we got about 125 stocks, and if you think you want to filter even further, you can say like, I only trade contracts between $100 and 200. You can say, you can change it like the prices should be between 100 and 200. You have around 47, and then you can actually see what it is, the description here. Most of them are puts. I mean, everything, I don't see any call. Maybe there is one call that is on SQQQ that's inverse of QQQ. That makes sense. Everything is puts here. And then you can basically sort it out by volume. The contract with highest volume right here is SPY weekly 27 Feb 395 put. So you can just right click here, copy the contract, and you can open a chart for contracts, and you can basically see how it is. So at the close of the day, many people have bought SPY 395 put. And if you open the chart for SPY, you can see if it is close to 395. Yeah, so $1 away. It's easy for SPY to go down from here. You can see the trend is downside. It can also go up, but I mean, the long trend, it's looking like it's going to go downside. So it's common to see there is a lot of puts lined up for SPY 395 puts. Again, the second one is SPY 396 puts for 27th expiry. That's the Monday. And then for 3rd March 390 and 3rd March 392 puts. Everything is SPY here. There is one Apple 145 put, and then the volume is high. You can also sort it by open interest. The 3rd March 390 put has the highest open interest. The the relation here, right here, is the volume is number of transactions. The open interest is number of contracts that are in play. So both are equally important. I would say I would give slightly higher priority to open interest here. But then, yeah, you can sort it by volume as well. Or, this one right here has both volume and good open interest. So maybe March 3rd, 390 put is something to look at. And then I think it's about $150. So if someone is interested in spending some $150 on a trade, you can look at this contract right here. And you can add many criteria if you want. I mean, you can also add a stock criteria here. You can say like, okay, the underlying stock for this option should have a market cap of 50 million or 100 million, whatever. You can also add additional criteria outside of options. You can also add a pattern. For example, you want to see like, okay, so I want to look at a stock that is having a flag, for example, right? And then time phrase, daily, and you can say like an hour, and you can run scan. Maybe it will show some. It doesn't look like it is showing any. We add a pattern, so they're going to remove it. But then, yeah, like I said, you can have like current ratio, or you can say dividend yield. Should be minimum, 1 point something, and then you can scan. I don't use any of those because I purely like to look at the stocks that have these criteria like days to expiry and the volume and the open interest. The last should be between 1 and 20. So you will get a lot of contracts every 7 minutes or so. It auto scans. So you're going to see a lot of contracts, and it's important on how you sort it. I think at any given time I have seen like 20 to 30 contracts. It's all gonna be mainly on SPY and the big names, because for the volume and open interest to be so much, it has to be one of those. And yesterday I think it was yesterday or day before, I was actually scanning this, and I found this laser LAZR. Remember, if anyone remembers LAZR, it was on one of our stock scanner right here, the stock hacker. 3 green days in a row, 3 up days. If I run this scanner, I also see LAZR when I sort by dollar volume. So, and if you look at the options hacker, you also see LAZR. So something is cooking there. If you look at LAZR stock chart, well, it's also close to ER, I believe. But if you basically look at it, it's actually making a nice higher lows here. So actually going in a good pattern. So maybe worth watching. Maybe it's gonna just blast off from here. We don't know, but that's how we connect the dots between the stocks and options. And I like to trade SPY or SPX for the most part. So that's how I pick. I just sort by volume or open interest, and I pick if I have. So that is option scanner. And like I said, I mean, you can play around if you have Thinkorswim. You can say like how much should be extrinsic value, how much should be intrinsic value, and then you can also say, let's say, on the probability of touching, I think it's the probability of touching the stock in the money should be like 85%, for example. And then there are no matches. Oh, there are a few. So the probability of this happening, if it is 85%, then basically these are the stocks that has a highest probability of winning. So these are the contracts worth looking at. So 27 Feb 396 put has a highest probability, and you know why it is highest probability? Because if you look at the chart right here for SPY, it is right at 100 and 396. So the chances of it going down 396, staying under 396 and 395 is quite high. That's natural for us to see those are the stocks that are highest probability. Options is all about probabilities. We should understand the probabilities and we should understand the standard deviations, which in turn explains us the probability. We will look at probabilities sometime in the future sessions, standard deviations and probabilities, how they work with the options. But at this point, all you have to know is the chance of your contract going in the money. If it is high, that means the chance of you making money is high. What this means right here is the chance of you making money is 85%. I mean, what else does anyone want, right? I don't use this. I actually am feeling very interested to look at this right now. I may run an alert. I will probably create an alert like this. Click here, and then it will send me alerts. So I'll probably try this. Probability of touching, I'll mark it as 85% and run the scanner and see how it goes for a week or a month. And that will give me good confidence. But yeah, this is options hacker. This is directional. If you are buying a call or buying a put, this is the scanner that you should run. But if any one of you are selling calls via verticals or credit spreads, you have a different hacker, and that is this. It's called a spread hacker. What it does is it's the same thing. It's all for the options. It's not for the stocks. But then this is on the selling side, or it is basically on the spread. Some people do vertical, some people do diagonals, and some people do calendar spreads to basically, sell the calls, right? Like you will buy a call and then you will sell a call if you are bearish. If you're bullish, you will buy a put and you will sell a put, right? And if you are one of those guys who is part of the theta gang who want to sell the calls, it could be covered calls, it could be verticals, it could be diagonals, it could be iron condors, it could be butterflies, it could be anything. If you are someone who want to sell the calls, this right here, the spread hacker, this is for you. And this is wonderful. I mean, this is amazing tool right here. If I used to sell calls, I used to sell verticals a lot. And if there is anything that I made consistent money in options, that is by selling. I had the highest success rate by selling than I was buying. Give me 1 second. I have to connect my Bluetooth here. Can you all hear me? Can you still hear me? I have to change my headset. Can you update in the chat if you can hear me?
Yeah, we can hear you.
Okay, thank you. All right, so so this is basically a scanner that will show you what are the spreads out there, what are the spreads out there that you can sell to collect the premium. So you all know theta is what will kill the options contracts, right? The time variable is what will cause most of us to lose money when we are buying a call or when we are buying a put. But you're on the other side. If you're selling a call or if you're selling a put, you're basically on the bright side of collecting the premium based on the theta, right? Theta is one of the amazing thing out there, and there's a big group on Reddit, and there is a big group called Tasty Trades. They basically sell calls, sell puts, and then they collect the premium. So when you click spread hacker, the same thing, you click on the add spread filter, and then you get a lot of criterias, and it's all default. You cannot write any custom criterias, which is good. We don't want to mess with options. So I just want to show you guys something, and I sorted this in a way that I could show you something. So what I did was I selected days to expiry. 6 days. So it's going to basically show me all the contracts that are going to expire within 6 days, nothing beyond 6 days. And the probability of profit is 95%. Meaning if you take this trade, if you sell these trades, all the trades have a probability of 95% success rate. All of these right here. So how do you sort it? I mean, all these, there are many trades here, but how do you pick a trade, right? Everything is above 95. How do I sort is how much credit I will receive. So if the mark is 90, that means you'll get, $90 if you take this trade. It has a probability of 98.4% probability of profit. And the max profit percentage is 21%. And then you have the front volume, back volume. I don't even know what these are, honestly. But then if you sort it by mark, you can also sort it by probability of profit. But this is it. Right in front of you guys, you have a trade that has a probability of 98.4%. Now, anything can happen, right? You may lose this trade even though you have a highest probability, but hey, options is all about probability. It's all about how much probability you have to win. And then let's just say you want to do this trade, and then this is a vertical. They are buying 3rd March 2023 190 call, and then they're selling 185 call. That means they are bearish on this stock. This is Marriott. MAR is Marriott, and then they're collecting $90 as premium, and then their risk is $5. In short, the risk is $410 because they're receiving $90 as credit. So they are risking $410 to make $90. For someone who is listening, it might sound stupid, right? Like, why would I risk more than I would get? But you have to look at this. The probability of profit is 98.4%. That's amazing probability, right? So that's like 3 standard deviation, close to 3 standard deviation probability of profit. And if you want to just right click, create a duplicate order, you can basically do this on Thinkorswim. Like, you can right click, create a duplicate order, and then you can basically get this order here. And then you can see like you are gonna get a $90 credit for this one trade that you place, but you have to risk $410. See, the difference between this strike and this strike is $5. That means you should have $500 in your account. And if you basically sell this spread, this vertical, you're gonna get a credit of $90. And then you're gonna realize that on 3rd March of 2023, which is, I think, next Friday. And why is it next Friday? Because I've selected here as 6 days, right? If you want to go for longer calls or longer puts, you can basically change this from 6 to 60 or 300, whatever, right? You can do that. But I don't like selling or doing verticals for beyond a week. I'm like that personally, but if you are someone different, you can change this. And then, I mean, all you have to do is confirm and send. You can look at this stock chart as well, MAR, right? MAR is Marriott. So you can look at this. I mean, it should close above 185 for you to lose money. We are basically buying a 190 call for low cost. So you can look here, 3rd March. You are basically buying 190 call, and you're basically selling 185 call. For you to lose money, Marriott should close above 185 by 3rd March. So let's look at the chart again. Does it look like closing above 185? Hey, anything is possible, but time is your friend when you're selling contracts. Time is your friend. This stock is at 170. And then if you basically look at the ADR, it has it has a $3 move. So it can basically move up or down $3.4 every single day. It is technically possible, but then it is right now going in a flat range. It's very hard for Marriott to move up to $185 in less than 1 week. It is possible, but the probability is very less. How do you know? Because you look at these bands here, right here. This is 2.3 standard deviation. That means for it to cross this range, the probability is less than 5%. It is less than 5% that the stock will close above 180. But anything can happen. I mean, there could be binary events. There could be some news that will say like, hey, the whole world want to book Marriott hotels. It could just end up by $1,000, right? We don't know. But from what we know, the information that we have, the deviation is 2.3 here. That is at 180. The bottom is 167. We are doing a bear spread. That means we are betting that the stock will either go flat or it will go down. We are betting that the stock will not go up and cross 185. The stock can do whatever it want to do. It just should not close above 185. And then we will make money. For how long? For 1 week, right? And then how is this scanner helping? The scanner will identify for contracts that have a wider spread. When I say spread, it's the gap between the bid and ask, right? The gap between bid and ask and the gap between these two strikes, it's very high. Look, it dropped from 195 to $15, just between $5, right? So the scanner is basically going to look for stocks that have a wider range, wide spreads, and then it's going to look for stocks that have a very low probability of touching those strikes. I mean, this is amazing right in front of you. But again, you should understand how selling the contracts work. And many people say 99% of the people lose money in options. So who is that 1%? If you are losing, if 99 people are losing money by buying calls or buying puts, who is that 1% that's making money? That's the people who are selling the calls and selling the puts. The people who are on the selling side will make, I mean, I've done this, and then this is probably one time where I made consistent money, week over week, week over week, week over week. After I think 3 or 4 months of me doing this, I had to take a break because of my job reasons. But this is amazing. Selling is one of the finest things. But we would not see 100% returns. We will, if someone is getting 1,000% returns and all, we will think like, why should I just, $90 out of 500 is like what, some 20%. I don't want 20%. I want 100%. I want 200% or 1,000%. My friends are getting, the people in the groups are getting 1,000%. I need 1,000%. Sure, but the probability of you losing that money is 99%. But if you are on the selling side, the probability of profit is 98%. So if you want to be wise on options, unless you have a lot of money, be on the selling side. And if you don't have a lot of capital, someone might say like, hey, I don't have $15,000 to buy Apple 100 stocks and do covered calls. Hey, you can do spreads, right? You don't have to buy 100 stock of Apple, but then you can basically come to here, APL, and then I'm going to delete this here. If you're bearish on Apple, for example, for 3rd March, you can do something like, you can do this. So you can buy 155 call, and then you can sell 152.5 call, and then you'll get a credit of $17, right? And then you're risking $250, and then your probability is 100 and where is it trading right now? Apple. So it is trading at 146. For Apple to close above 152, the probability is is high. It's one standard deviation away. So it's possible that you can actually lose money on this trade. But then see, this is how you do credit spreads. If Apple closes below 152, you get to keep all the $17. Someone might think, I don't want to do $17. You can increase the contracts. You can do 5 times $17, whatever is the number there. So this is vertical spreads. You can also do calendar spreads, which means you can, buy something on 3rd March and you can sell something on 17th March, and then you will still make money. So you're buying 150 call, 3rd March expiry, you're selling 147 call for 17th March. You're betting that Apple will close below 147 by 17th March. You will collect $326. Right? So that is spreads. We are not looking at spreads at this call. I'm not explaining spreads on this call. We can have a separate session for that. But what I'm trying to show you is this scanner right here will do all of that work for you. You don't have to do anything. All you have to do is run these 2 conditions. If you want to add, you can add more. But I think this is more than what you need. Just run this to expiry for whatever days you want, and probability of profit, you want it to be greater than 95%. Run the scan, sort by mark or sort by probability of profit. All you have to do is right click, create duplicate order, confirm and send. If you think the stock, if you know the stock, if you don't like Marriott, here it is, Target. And they're basically, they're bullish on Target, it looks like. And then you can basically buy 140 and sell 145 put. For us to be able to be profitable, it should close above 140, and then I think you can collect $43 for this particular trade, and then the max profit is 9% on this trade. 9% every week, 10% every week. That's insane amount of profits on a long term with a 98% profit probability. 98% profit probability is insane. I mean, no one can get it. But like I said, we are humans. We will get greedy. We will say, I don't want 9%. I don't want 20%. I want 100%. I want 300%. Everyone else is getting it. I want to buy calls, but guess what? Time is your enemy when you're buying calls. When you're selling calls, time is your friend. And I mean, I've seen people make a lot of money selling calls if they are consistent and if they're doing it with a lot of discipline. I know personally a guy who has retired. He makes about 5,000 to 8,000 just by selling calls and puts. So insane money there. I mean, a lot of money there. And this is how you can scan for spreads for doing verticals. I think right here we only have verticals. And this is a spread book. The spread book means Thinkorswim will capture all the trades that have been executed or work in progress on the platform, and it will basically maintain a book. That means if you want to see where all the people are, what are the other trades that people are doing, you can basically come to the spread book right here, and then you can see all the trades that are in working condition or working status. Because it's a weekend, I mean, some people just place these orders. They'll be doing some groundwork, or weekends they'll place these orders, and then they will forget them for the next week. If it hits it will trigger and it will sell. So you can see there is a lot of call options on AI. That's Chat GPT stock, right? AI stock, look at the quantity. They're selling like 50 contracts. They're doing calendar spreads. They are buying 10th March and then they're selling 17th March. And then they're saying AI will be closing on less than $35. If you look at the chart for AI, it's in a very good bear flag. So it's in a very tight zone, but then 35 is far away. I mean, it is most likely not possible for the stock to close at 35 by 17th March, but anything is possible. This seems like a stock that can actually run well. but this is in a bull flag, and it is consolidating right now. So it should basically break it and then go to all the way to 35 by 17th March for people to lose money. But a lot of bets, big bets happening on AI. It's the same. It looks like the same person, most likely. They're buying 10th March, and then they're selling 17th March, 35 calls. And that's a calendar spread. And they're collecting good premium right here. Like they have a limit price. One guy wants 200 per contract. I mean, that's insane. They all have these limit orders in place, and then Monday morning they will open, and whatever is can be filled based on what they want, that they'll be filled. But a lot of activity on AI. You can also see Netflix. Netflix has some activity, 12 contracts for 19th Jan 24. These are more like strangle, and these are more like leaps going into 2024. But then you can see there is some activity going on. Netflix, SPX, 10 contracts. These are calendars. They're basically 17th March. They're basically doing the same week, but one is weeklies and not one is non-weekly. So, and there's one vertical on EH. There are some calendars, iron condors on ABBV. And then you can basically look at the whole book. This is where all the contracts were lined up for the weekend. And I mean, some of these have insane credits, like see like 150. Some of them will have like 585. This is KR. Is it Kroger? KR. It's Kroger. Okay. So basically, they are betting that Kroger, their calls, they're all verticals. They're bearish on their. Okay, so they're basically doing strangles on Kroger. So basically, they are selling 46 and 41. That means they think that Kroger will stay between 46 and 41.5 by 3rd March, by end of next week. So let's see if that's accurate, right? So 46 and 41, yeah, they're way away. It's most likely they're gonna get money out of this. So you can see where all the money is going, and then where all the spreads are positioned. And sometimes you can see big trades on SPX, like 1,000 contracts, 10,000 contracts in the spread book. You just have to keep looking at the spread book. And since these are debits, okay, so there is one thing, the ones that are marked in red color, these are credit spreads. The ones that are marked in green, these are debit spreads. Debit spread means you want to buy a call, but you don't want to risk everything. So you basically buy a call at 100, for example, and then sell a call at 95 something. So you will not risk everything, but you will still be in the game. So these are debit spreads. I don't do debit spreads. I don't like them. But the spread book will basically show you both debit and credit spreads. Everything, all the status right here is in working. So people over weekend, they will just place the limit orders and then they will leave it. But then if you open this on Monday, you will see trades actively flowing in and actively changing. And then you can basically sort it by quantity. That's what I do. You can also sort it by expiry or time placed if you want to see the latest. But that is in a nutshell of what the spread book is. Spread Hacker is an insane tool if you really are into selling calls and selling puts. This is amazing. You should know this. This is really mandatory for anyone who is trying to make money by selling calls, for any people who are in data gap. Options hacker, we have looked at this. I will share this hacker in the chat. I have to save this. I'll save this as V2 because I've added this probability of touching, and I can share this. So I'll share it in the chat. If anyone want to use it, all you have to do is copy that link, come to here, go to setup on your Thinkorswim, open shared item, paste that link that I shared in the chat, and you have to click preview, and then you can just import, and then you will find it here. You'll find it here. The load scanner. If you save it, you'll find it as this one. So that's it for today. We covered a brief. We did a little brush up on stock hacker. We looked at options hacker. We looked at spread hacker. I mean, this is insane. I love this. And then spread book is basically where is everyone placing their money? Where are the big trades happening? Because today's a weekend, we don't see much. But if you want to look on Monday, you can look. You will see big trades. You don't have to pay money for any chatter flow or options flow or anything as such. It's all in Thinkorswim for free. I don't use ISC spreadbook. I don't know what it is, but if I learn it, I will probably take another session on what it is. But for now, I use mainly these three, and occasionally I look at this for what I've been doing. I will stop there, and I will. I'm open for any questions, anyone. You can unmute yourself, or you can post it in the chat. I can look at the chat and answer the questions if you want. And there are, I mean, I don't think I have saved this. I don't think I can save this. But I mean, this is a pretty small, there are only two conditions here. So you can simply do like days of expiry and probability. Where do you see the standard deviation in the charts? So standard deviation is nothing but, look at BAC. So this right here, this is the standard deviation. So when you open Bollinger Bands, for example, if you go to studies, if you click edit studies, I have a multi-time Bollinger Band, but see, this is a Bollinger Band. You have a standard deviation of 2.3 is what I have. I think you will ideally have to, but then this is where the standard deviations are for Bollinger Band. There is also a study called standard deviation channels. I used to use them in 2021. I'm not using them anymore. But if you basically plot that, it's gonna show you the standard deviation per this chart based on the chart duration. So it is 20-day, 1 hour chart. So it's gonna plot this standard deviation. The later point, I realized that this standard deviation channel is not that accurate. So I thought I would be using Bollinger Band because this is a 20 simple moving average on a daily time frame. And then these bands right here are the standard deviation channels based on the 20-day simple moving average, 20 daily simple moving average. So these are my standard deviation channels right here, this and this. So I have to look at here. So the thing is that some people may not agree with what I'm saying, but the point is that when a stock hits 2.3 standard deviation channel, after a good run on the bullish side, there is a good chance that it may go the opposite side, because the probability of a stock exceeding 2.3 standard deviation is greater than less than 96% something. So it's when it touches, when for example SPX, I've been looking at this, when SPX touched this, there was no news, it just went down, and then from there it just went down. And yesterday when the stock touched this standard deviation 2.3 on the downside, it just pulled up a little. So it basically went from 39.46 to 39.75, about like $35 move something. So I know that mainly SPX, I like the standard deviation on SPX. So it's basically when it touches this, I know that there will be some pullback. So I'll be looking at these standard deviation bands.
I have a question.
Yeah. Hello.
Still, it's so informative. Thank you so much. And so you are using Bollinger Bands to see the standard deviation, right?
Yes.
Right.
Yes. I use Bollinger Bands. I mean, there is standard deviation channel, but what I have observed is the standard deviation channel, it will basically tilt. It will tilt. So, for example, today it is 40-40, right? You can see here it is 40-40. If you come tomorrow, it will go up to 40-60 something. But the Bollinger Band, it will not change. If it closes at 40-89, it will stay at 40-89. But the standard deviation channels, I've observed them that they will tilt. Like if it is like this, tomorrow it may just tilt a little bit up. So it's not that accurate from what I've seen. So I stopped using.
Yeah. In the SPX example you mentioned, like so it came very close to the lower band, then it started going up, right? Like you were mentioning it.
Usually that's how it works. It doesn't mean it will go all the way up, but there will be some kind of pullback. But so the one thing that we have to understand is standard deviation is the probability of a stock crossing that price based on statistics, right? And there are, I mean, a lot of proven theories behind it, but the point is that when a stock crosses 2 standard deviation, that means it has already crossed 95% of its move. But again, we have to understand it depends on stock to stock again, right? Like if a stock that has a higher ADR percentage, I mean, SPX only has 1% right now, but if you look at Tesla, it tells us a different story. For example, look at here. It crossed 2.3 standard deviation. It did a small pullback, but then again, it is constantly breaching 2.3 standard deviation. Like again and again, it is crossing the 2.3 standard deviation. What that means is it is clearly telling me that the stock really want to go up. I mean, if someone can monitor for stocks that are crossing 2.3 standard deviation, and if you know Tesla is actually crossing 2.3 standard deviation, that is really like you have to look at it, because if Tesla makes that move, that means it's gonna make a big move. When it crossed this standard deviation right here, it was about 143, and then I think it went like 216, right? We also looked at this in the last session. But if SPX does the same, it's usually gonna pull back. It's usually gonna pull back. See, if you see here, it crossed it, it made a small pullback. Again, it crossed it, and then it made a pullback again. See, whenever it crosses upside or downside, doesn't matter. See, it crossed it here, it made a small pullback. And then again, it tried to make a move here, made a pullback. So whenever it crosses the standard 2.3, it is more likely that it will pull back a little bit. But it doesn't mean it will come back all the way. It may just slightly pull back, and it may continue to the direction. So like today's chart, it made a small pullback. It doesn't mean it will go all the way up to 40.86. It will actually, most likely go further down from here. But again, it's based on statistic results that we see.
So yeah, thank you. One more question. So all the ATR and all those 4 or 5 indicators you are seeing, right? Those are all like you have multiple studies on your chart, right?
This is just like, I want to know, like, how much percentage can this stock move up or down? So the ATR is average true range and ADR is average daily range. They'll be about the same, like few dollars here and there, but it will show me the range of the particular stock I'm looking right now. For SPX, it is roughly $55, right? But if you look at Laser is a new stock, it is 75 cents, right? So it can move up or down 75 cents, but by percentage, it is 8.9%. The higher the ADR, the bigger the move the stock can make.
Oh,
Look for Tesla, it's like 5%. It's a $10 move up or down. I have VIX. I just want to have an eye on VIX to see where things are. So
what is that orange color on the screen? That's the
which orange color?
like there is a very middle of the screen. You have a
oh, this this is a weekly 10 moving average crossing 20 moving average exponential. So I don't want to look at 100 or 5-6 different charts, one weekly, one daily, one hourly. I don't like that. So what I did was I created my own indicators where I will only have one chart. This will show me the weekly strength, and this is the daily moving average, the 20 daily moving average. This is 4 hours. And I have the Bollinger Bands, the standard deviation that covers the 20 daily moving average. And if I really want to go to intraday, it will actually switch and it will actually show me the 10-minute, not this one, the 10-minute moving averages, 513, 12, 72, 89. So I don't switch between charts. I just will keep one chart in front of me. And that will tell me the whole story, weekly, daily, hourly, 4-hour, and 10 minutes. I will not trade anything. I will not look at anything less than 10 minutes. So it helps me that way. All these indicators were shared in the education group if you want to look at those indicators.
Okay. Thank you so much.
No worries. Any more questions, anyone? We're at the top of the hour. All right. If you like the session, if you have any other topics you want to cover, please let us know in the options group or education group. I will try to cover the topics that you want to look at. And have a great rest of your day, everyone.